Okay, so today's Zoom, I've got Tori Larson with me. She's from Knock, and they have a really cool loan program that's really designed to help people who have the desire to sell their home and buy another. And so I'm gonna allow Tori to take over here, and she's gonna roll through the what they call the Knock Home Swap program, and explain to us how the program works and just the ins and outs of that. So Tori, go ahead and take it away. Tell us how this cool loan program works.
Yeah, absolutely. Thanks so much for having me today, George. I'm going to share my screen here real quick and share a couple slides.
Okay.
So first thing that you need to know is Knock is a lender. At the end of the day, Knock is just a tech-enabled lender. We were founded about 7 or 8 years ago with the intention of improving the real estate transaction for people and smoothing it out. In my particular role, I talk to agents and their clients almost daily, kind of doing some pre-qualifying to make sure our particular program, what we're going to talk about today, Home Swap, is a good fit for them.
Okay.
So the thing that you need to know about us is we have an innovative lending solution that allows you to purchase a new home prior to selling your existing one. Now, that may sound a little bit too good to be true. As you know, most people cannot carry 2 mortgages. That's pretty costly, and they're not going to be able to qualify for that second one. Most people are equity rich and cash poor. A lot of people, especially in our market, have tons of equity in their home and need to be able to leverage that equity, right?
Right.
So that equity is just trapped. How do you get access to it? Previously, you were really limited. There's bridge loans out there, right? But we all know that bridge loans are super short term and pretty costly, right? And those bridge loans also kind of inhibit your ability to qualify for that new purchase mortgage because it's kind of counting against you. It's,
Right.
impacting your debt to income, and you're
Sure.
potentially having to pay your current mortgage, your new mortgage, your bridge loan interest until you are able to sell your home. So that can really, really run up. That was one of the problems we were trying to solve. So basically, what we do with our home swap is it's a 2-part lending solution. The first thing that we do is we get you pre-approved for a new purchase mortgage. Now, that purchase mortgage can be a conventional or jumbo loan, and we offer competitive rates. It's issued by Freddie. It's a Freddie Fannie Back loan issued by Knock, and it enables you to make a non-contingent offer. So we're essentially going to say, hey, we're giving you a pre-approval, and you are not going to be contingent upon the sale of your home. We're removing that automatically.
Which is
So,
big deal, right? I mean,
yeah.
that's one of the toughest parts of this process for people typically is if they have to sell their home and they're going to make an offer on their next new home, taking a contingency into the negotiations is always sort of got one mark against them, right?
Absolutely, absolutely. And the market has shifted a little bit, right?
Mm-hmm.
So, yeah, you might get a contingency accepted, but then you have to worry about, is your home going to sell in a timely manner on the back end, right? Are you going to be able to waive that sale contingency? Is your home going to sell? You're going to have to deal with people in and out of your home. You're going to have open houses, trying to live and work and get kids to practice and, just have a life around, home showings can in itself be a second, part-time job for a
Right.
homeowner, right? So it can be highly inconvenient. So first piece, that new mortgage. The second piece is, okay, great. I've got this new mortgage. I'm pre-approved for it. I'm not contingent, but how am I going to access my down payment? The second piece is a 0% interest equity advance. In form and function, it acts much like a bridge loan without all of the high costs and the fees. So that equity advance can be used for quite a few things. You can use that for funding the down payment up to 30% and to pay for closing costs. Can use it to buy down and lock interest rates. Can use it to make home improvements. We set aside, well, I say we set aside. If you need to make home improvements, we can use up to $35,000 to make those home improvements. Now we're talking mostly cosmetic repairs. We're not talking about, replacing sewer lines or anything like that. But if you, as the agent, are making recommendations to your client, like, hey, I think we can really get 700,000 if you, do these updates. But if you don't do these updates, you're probably looking at, 680. That might be a game changer, right? They might want to put in, 5,000, 10,000 to make those improvements.
Right.
So that's available. They can also pay off debt. So your client has the ability to pay off debt that might be outstanding that's keeping them from getting the pre-approval or keeping them at a certain DTI. So, maybe they have a car that needs to be paid off. And if they pay off that car, they're going to be able to qualify for a 650,000 purchase versus, a 630,000 purchase. That's a big deal.
Yeah.
So being able to pay that off might really help them get into that dream home that they want to get into.
Okay.
They also are only going to pay one mortgage at a time. Ideally, what happens with the Knock Home Swap is your client gets pre-approved, they go out shopping for a new home, they close on that home, and then you're able to list their home while it's vacant, while they're comfortably living in their new home. However, they're not going to want to pay double mortgage payments out of pocket, right?
Right.
So Knock sets aside 6 months worth of mortgage payments out of their existing equity and pre-funds that to them monthly so that they can pay their mortgage payment. That does include anything that's escrowed. So, if it includes their taxes and insurance, then that's going to be set aside, pre-funded to them so that they don't have to pay that double mortgage payment once they're comfortably in their new home.
Okay. Yep.
Any questions so far about that?
No, I mean, that sounds good. So tell us about when you say pre-funded. I mean, what does that look like in reality? How does a person make their payment when they're going through this process?
Yeah, absolutely. So we set aside that equity advance. We're going to close on the equity advance kind of simultaneously when we're closing on the new purchase mortgage for the home. So the money never really hits your client's account other than those pre-funded mortgage payments. So your client sets up their account. Those mortgage payments are pre-funded from their equity that's basically escrowed on our end. We pre-fund it to them about 5 to 10 days prior to when their mortgage is due. So they're responsible for paying that.
I see.
Now, the reason that we do it this way and kind of keep the money all on our end is because we don't want to dump $200,000 in somebody's account and have them go out and buy a boat.
Right.
And all of a sudden, wreck their mortgage and have everything fall apart and then owe us this money.
Right.
So it's a safety net for us and it's a safety net for your client.
That makes sense. Yeah.
Okay. Absolutely. All right. So like I said, it is all of the perks of moving into the new house before you sell the old one. You skip the hassles of the showing. You have no mad dash to find a house once it sells.
Right.
It can be used for new construction. And I know that can be a little bit challenging because, with new construction, oftentimes they don't want those contingent offers, but it's not going to be done for 6 months, or 9 months. So what do? This can be used for new construction. So you can get that pre-approval, make that offer that's non-contingent. We've all seen situations where these, new construction drags out because a microwave is missing, just little things like that can drag out this whole process and make it really challenging to manage on the back end when you own a home. So we can definitely work with new construction and we just get that pre-approval. We keep it up to date every 90 days or so, make sure that you guys are, still current, still where you need to be. And it works great for new construction and you can lock your rate for up to 120 days. So, kind of revisit those lock periods throughout that process, but rates can be locked.
Okay. Excellent. That's great. Okay. Very good. All right, let's move on to the next slide.
Yeah, so let's talk about the question that's always on everybody's mind. How much is this going to cost? Now, most lenders are going to charge an origination fee, right? An origination fee fee is usually equal to about 1% of the loan amount. It's factored into your standard closing costs. You know, you see it kind of outlined on your statement there.
Sure,
So
sure.
with NOC, we charge a 1.5% commitment fee, and that's going to be based on the purchase price of the new home. And that 1.5% basically covers the cost of us to carry the equity advance for the time for that 6-month period.
Sure.
We don't actually make much money off of that particular thing. So it's 1.5% based on the purchase price of the new home, and then it's going to be $19.50 for underwriting and processing. And those are the only fees that are associated with this program. So it's going to be slightly more expensive than a conventional lender, but you're also getting the ability to purchase non-contingent in a situation where you wouldn't be able to, and getting to access that equity up front and leverage that and have so much convenience on the back end.
So is it when you say they're able to buy non-contingent, are they going to be like a cash buyer, or is it still be subject to them getting, quote unquote, getting a loan?
Yes. So it's still a financed offer. It's just not contingent on the sale of the home.
Okay, gotcha. Okay, excellent.
All right.
Just the fact that they're non-contingent. The other piece that I find is when you come to the table with a contingency, a lot of your negotiation leverage lessens. Because there's this, the seller feels like they're doing you a bit of a favor by taking a contingency. So, if they're going to take a contingency, then they're not going to, budge much on the price. We see a lot of that in the market. So, the fact that you can, as a buyer in the marketplace, you can come to the table with a non-contingent offer. Obviously, if you're competing against somebody else, that's a big benefit. But even if you're not, just being non-contingent means you can negotiate, right? And if you've got that house sale that you're attaching to your offer, it does tend to take away leverage. And I think in this market where we're seeing negotiation happening again, that is also a big, from our perspective, our side of things, that's a big deal.
Yeah, I agree. I actually spoke to an agent yesterday, and she said that she and her clients made an offer with NOC, using the home swap option, and their offer was actually about $15,000 less than a contingent offer that came in, and they accepted the NOC offer because it didn't have the sales contingency. So you're essentially saving your client that money right there, which more than makes up for that 1.5%, convenience fee, I think.
I mean, just in the marketplace, I think it's pretty easy, even though you are going to be paying a little bit higher fees, let's say, for this versus a conventional standard loan. I think that it would be very easy for a buyer to make up that and more in just negotiation power, being non-contingent versus being contingent. Yeah. Absolutely. Okay.
All right. Well, that's the presentation. Any other questions that you might have?
No. So if somebody wanted to get in touch with you in regards to this program, how would they go about doing that?
Yeah, so I can be reached directly. I'm local, so I'm a local gal here in Buckley, Washington. Okay. So they can call me directly. My number is 206-209-1502. And I can, I have an email as well. My contact information is not on this slide deck, unfortunately. I removed that because I didn't exactly know what was going to happen today. But George can provide you my contact information, and I'd be happy to chat with you and see if it's a good fit.
Okay. And so, let's just say somebody says, hey, I want to check this out. What does it look like? What would it look like for them next steps? Do you have like an online application process?
Yes, it's actually super, super easy. It's really similar to any other pre-approval process that you would go through with any other lender online. The only additional step is, one, we're going to have to make sure that the home that's selling qualifies for the program. And like some of the parameters for qualification of the home that's being sold has to be listed or valued at $2 million or less. So, got a lot of wiggle room there on, the number of clients that you can serve with this. So 2 million or less, townhome or single family home. And it does have to be a primary residence. So this is a Freddie family program. So we're not able to do, investment properties or anything like that.
Okay.
So that's the first thing. We want to make sure the home qualifies. From there, We don't actually come out and do an appraisal of your existing home to see if it qualifies. We ask for either the agent to provide us photos of the home just so that we can confirm the condition of the home. That helps us, determine the equity position. And something that we didn't talk about is Knock's backup offer. And that's one of the most commonly asked questions is, what happens if my home doesn't sell in 6 months? So it's a really valid question.
Sure.
So if the home doesn't sell in 6 months, there is a safety net available for your client. It's not a sexy safety net. It's going to be a backup offer of about 80% of the list price, but it is a safety net nonetheless. And my thoughts are, if something has set for 6 months, then the pricing might have been a little bit off in the first place, or something might actually have been wrong with the home, right?
Sure.
So we've had a lot of success with this. We've had to purchase, I believe, 2, maybe 3 homes in the last 5 years. And so, that 5 years covers a time period where, it was a little bit more of a buyer's market into that really, really tight market into now what we're shifting into now, which is more of a neutral market. So we've had a lot of success making sure that we haven't had to execute that backup offer because we don't want to own homes. Not our plan.
Yeah. So the home would go through a qualification process before the buyer enters into a knock home swap situation. They would know what that 80% value would be, and so they would be prepared for that. Like I say, it's not something that anybody is gearing up to have to use, but it is there, and if it's necessary, then at the 6-month mark, that's when that would come into play, right?
Absolutely. And the great news is we partner with agents like yourself who, know the market well, list these homes in a way that is going to get the most money for their clients, but also recognizes, what's happening in our market and how it's shifting. So we really trust the agents that we partner with. Back to applying. So that's the only step that's a little bit different is, that home approval process, making sure that the home's eligible. After that, it's just applying for a new loan. You're going to provide all of the information that you would as if you were applying for a loan with Rocket Mortgage or your local lender. Submit information on your income and your assets, and we're going to look at your debt to income. Credit score requirements are going to be 620 for the low end for a conventional conforming, and then we're going to want 680 or higher for a jumbo. So those are just basic lending principles.
Excellent. Well, thanks a lot, Tori. I super appreciate you just jumping on here and explaining the program, and we're going to send this out, and if we get anybody that wants to, dive into this further, it's such a great option for people
for sure.
that that are in this place where they've got to make some decisions as to how to navigate a contingency, and so this is just some great information to be able to pass along. So thanks.
Absolutely. Feel free to put my email and my contact information. I'll share a Calendly link with you as well, so you can put that in the email. So if they want to schedule a call, they can.
Perfect. Okay.
Awesome.
Thanks again.
Yeah, no
problem. Talk to you soon.
All right. Take care.
Okay.
Bye-bye.
Bye.